Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of December 4th through December 8th, where we'll try to help you make money trading in December. Hopefully you had a successful and profitable November, and hopefully our strategies, our trade ideas will also help you make money trading in December. So let's get started. Good morning and welcome, Walter Lyons, Ligo Monama. Thank you for joining us. Glad to see you. Brian Moritz, thank you all for joining us in the live chat today. The Ricky Khan, Ellen Krantz. Hope you all are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of December 4th through December 8th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes contain links to bonus video, links to the tools and resources we use to do our market analysis, our strategies, trade ideas. You can find a direct link to this Google document with our notes in the description box below. We store all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks, and you can find a direct link to that publicly accessible Google Drive folder also in the description box below. Welcome, Gerald Fritz, Becca. Glad to see you all today in the live chat. Thank you all for joining us. So first we'll take a look at how the markets ended up on Friday in FinViz. So we'll go to the main page of FinViz. We see they were kind of stagnant early up waiting for Powell comments. So you can see it was kind of negative to flat up until 11 a.m. We'll talk about the comments that Powell made at his fireside chats, and you can see the fact that he didn't really say anything different. All the markets took off, had a pretty exuberant run from 11 a.m. Up until the end of the day. So all the indices ended up slightly positive, had many more advancers than decliners, 80% advancers, 16% declining, got 86% new highs, 14% new lows. We've now got 75% above their 50-day moving average, only 24% below. And we've now got more than 50%, almost 60% above their 200-day moving average and only 42% below. So very bullish. Again, it was kind of, wait and see until Powell's comments. And then again, you could see the markets were just waiting to make sure he didn't say anything different, negative, and then they took off. It's kind of interesting. The Magnificent Seven didn't really drive this rally in general. We see Microsoft was down, Apple was kind of flat, Amazon up a little bit, NVIDIA pretty flat, Google and Meta were down. So this exuberant rally on Friday wasn't really driven by the Magnificent Seven. It was more a broadening of the technology in general and the markets in general, as we'll see. Welcome EKS, Easy Mike. Glad to see you all in the chat. Hope you all are doing well. So some of the recent news, got the meme stock crowd going on again. Home buyers relying less on down payment gifts. Dow finishes above 3,600, post-weekly gains, now down near record high. S&P, so again, all very bullish, very positive news. We saw crude oil break down. It did spike up a little bit with the OPEC meeting, and we'll talk about OPEC, the Saudis announcing more voluntary cuts, but there wasn't any agreement on, quote, mandatory cuts within OPEC. And so then we saw oil break down again below 75. Natural gas still sitting below 3, kind of oscillating. We saw gold make a new all-time high up above 2090s. So we see it looks like it broke above 2095. We'll see strong runs in gold and kind of a catch-up in silver in the futures as well. We see all the indices are currently pointing positive. DXY, the dollars, was sitting around 103. So it's been kind of oscillating 103, 104, and then we saw a pretty steep decline in all the treasuries. Now the 10 years below 4.3 and the low 4.2. So again, treasury yields decline pretty significantly, and the prices, as we'll see, are rebounding significantly. Helen Krantz says gold, gold, gold. Yep. Yeah, we'll see that exuberant run in gold, and again, a catch-up bounce um, in silver as well. Walter's comment on DXY. So we'll look at each of the indices briefly. Look at the SPY. So again, we see that, exuberant run, gap up, pop above the previous high. So, again, very positive. Looks like, there might be some resistance, a little bit of resistance at that previous high. Again, pretty exuberant run. So we might get a little bit of a retracement, some profit taking, some resistance at that previous high. But again, all bullish above the moving averages, very exuberant run. Now in December. We'll look at the seasonal trends in December as well. Qs, the NASDAQ. Again, very similar, very exuberant run, broke above its previous high. A little consolidation, a little bit of a doji. So again, some resistance probably in this level. Might get a little bit of a retest on that previous high, but again, exuberant run up above its moving averages. Positive momentum, so all positive. Dow again broke, strong break above its previous high, going for, its previous high back in the beginning of 22. So again, very strong push from the Dow. Again, might get some, brief retracement, consolidation, etc. Test to that previous high, but again, positive momentum. Also the Dow. Look at the Russell. Russell had been weaker. You can see it did break broke above its long-term moving average. A little bit of resistance from that shorter-term moving average. So again, very positive. Had a little bit of a doji and then a breakout. It's got plenty of room to run up. So a little more room in the Russell. More potential for upside. A little bit more resistance around the moving averages. Look at the VIX. The VIX been, pretty much in steady decline since we got in November. So again, seasonal trends, positive going into November, the end of the year. The VIX, I saw the current VIX was sitting below 13. So it's the lowest it's been, in a couple years. So unless we get some unexpected economic data, we don't really expect the VIX to pop up. We don't really have any major catalysts other than the economic data that's coming out. And then we've got the Fed meeting on the December 12 and 13, I believe. We'll look at that in a minute. Okay, let's look at the groups and sectors in FinBiz. So we see Friday, real estate, basic materials, again with the decline in 10-year treasuries, mortgage rates go down, real estate had a run, basic materials, the dollar's going down, so that is a catalyst, tailwind for dollar-denominated commodities. Weakest sectors, again, oil, energy, we saw oil break down below 75, technology slightly positive, defensive, so it was a risk on generally. For the week, again, communication services and energy were the weakest, real estate, basic materials, the strongest, industrial, so the Dow. For the month, we got a mixture, real estate and technology. Again, we talked about real estate, for several months now and kind of expected that sector rotation back into real estate. And now you can see it's, one of the outperformers. Again, energy's been generally weak based on primarily oil, didn't really make its pop. Then for the quarter, again, we've got defensives, healthcare, and again, the energy sector. So in terms of sector rotation, and we'll talk about this more, and we'll talk about sectors that outperform in December towards the end of the year, also for the winter. Energy, a sector rotation back into energy is something that we'll be looking for. In terms of industries, again, they've, the very beaten down sectors they rotated into. So we see office, REIT, solar, Then we've got other energy sectors. Uranium's done very well. Coal's doing well. Gold and silver. So again, real estate's positive. And again, they rotated into the beaten down sectors. Uranium, a little bit of profit taking, but again, it's very high. As we'll see, they're close to their resistance. Let me pop this open just because we had a discussion the other day about uranium stocks. So you can click on any of those industries, see the component stocks. Some we like: DNN, LEU, UROY. You can see in general, they're generally high, and most are up near a resistance level. We got some decline in some, but again, uranium's been very strong. So another way you could track the component sectors in an industry and look for maybe a laggard. That might be an opportunity. Again, for the week, gold and silver, office REITs, again, those are so beaten down. People are thinking they might get an outsized return. Same thing with solar. See a bunch of the REITs towards the top. Bottom, some, communication services, internet, a few real estate, semiconductors, oil. Oil in general has been negative again. So for the month, again, office REITs, gold, silver, solar, oil, again, you can see for weakest, got some energy. You can see uranium's been strong, coal's been strong, real estate strong. And for the quarter, solar was the weakest. So again, you see the sector rotation from, into the weakest sectors, and probably some profit taking in the stronger sectors. Okay, let's look at the economic data we got last week and then what's coming up for the next week. So I'll open up the calendar at investing.com, grab a quick drink, and we'll go through some of my notes on some of the pertinent economic data from last week. And then again, we'll look at the schedule coming up for this week. Okay, last week, not a whole lot. Monday, Tuesday. Wednesday, we got mortgage rates. You can see mortgage rates been dropping a little bit due to the decreased yield in the 10-year, although the applications week on week was down. So it looks like people that took an opportunity from that drop in mortgage rates pretty much already took that opportunity. Again, we saw bond yields have dropped even further, so might see a brief pickup in mortgages and housing. Got core PCE prices was below expectations, so that's positive for future inflation. The GDP data came out much stronger than expected, 5.2 versus 4.9. Sales was better than expected, so it's, again, the economy's generally resilient. The fear of a recession isn't really there. So again, the Fed doesn't have to worry about a recession, although again, GDP is not one of the measures that directly correlates to the Fed mandate. Their mandate is full employment and price stability, which is low inflation. So GDP does not directly affect the Fed's decisions. See PCE prices a little below expectations. So again, inflation slowly coming down. Consumer spending was a little bit down. So again, the inflationary inputs are down, so that's a positive for the market. Thursday, we got jobless claims is kind of interesting too. Continuing claims is going up. Initial claims was below expectations. So again, we're seeing that the job market continues to be resilient. The Fed doesn't have to worry about skyrocketing unemployment. So again, they can wait to do any kind of cuts. And also, they could probably hike further and not fear high unemployment. PC prices, again, were pretty much in line or a little below expectations. Personal income in line, and consumption was a little less than last week. Then again, as I pointed out, a lot of the market was waiting for Powell's comments. These were speeches at colleges, fireside chats. I really didn't expect him to say anything meaningful, anything new, and he didn't really. I snapped out a couple of the quotes that they had tweeted out, and I also posted those in our Discord. So again, as this economic news comes out, the important economic news, I try to post it in our Surf the Markets channel in our Discord. So if you're not already a member of our Discord, it's free to join. You can find an invite in the description box below. Highly encourage you to join our Discord. Again, as the pertinent economic data comes out, I try to post that in our Discord as quickly as possible. You can see some of these quotes. Fed policy rate is well under restrictive. Fed prepared to tighten more, so if it becomes appropriate. So FOMC moving carefully as risk becoming more balanced. Premature to speculate on when the policy may ease. So essentially, it's everything they've been telling us for a long time. They're going to be data dependent. They're willing to and ready to raise rates further if inflation doesn't come down to their 2% target quickly enough. They're moving carefully, again, being data dependent, and there aren't any rate cuts. I know the market is pricing in rate cuts, and they even moved up their estimate for when the Fed would start cutting rates. Again, I don't believe they're going to cut rates anytime soon. That's what they're telling us. And inflation is still too high. You hear several of the Fed officials, commenting inflation's still too high. Now, we did see a mixture of volatility as these different Fed officials talk, some more dovish, some more hawkish, and that causes a little bit of volatility in the market. But again, their overall policy hasn't really changed. So next week, let me see if I missed anything from this previous week. So we see new home sales was down a little bit. Again, I think people that took advantage of the lower mortgage rates probably already did so. See, the bond auctions weren't bad and a little bit better than previously, so that's positive. House prices are still high, however. Consumer confidence was up, better than expected, so that's positive. Again, we see all these Fed officials talking. Again, as some came out dovish, I think it was Wednesday, I think it was Waller talked, and he was a little bit more dovish, and that caused a little bit of a pop in the market. So again, core PCE was positive, GDP higher than expected. Crude oil inventory was up. There was also a couple of announcements that they're refilling the Strategic Petroleum Reserve, which due to the cheaper prices, probably a good idea. Then we had the OPEC meeting. Again, they announced further cuts. There's like a million barrels per day additional cuts, but the cuts are voluntary. Seems to be disagreement among the members of OPEC, particularly the African nations. And I think Easy Mike might agree with me that this is a sign that possibly the OPEC members, are not going to agree. They might not comply with these voluntary cuts, and therefore we might get more supply. Therefore, we saw oil prices, drop down again below 75. Again, we talked about jobless claims, talked about PCE. Yep. Just a quick reminder too, none of our content should be considered financial advice. We're not financial advisors. All of our content is for educational and entertainment purposes only. So Friday, let's see. Yeah, Friday we got some ISM data. Again, slow, manufacturing is slowing, the economy's slowing slightly. Here's rig counts, so the rig count's a little up. So again, the U.S. is supplying a little more, so again, more supply, and that may again offset any of these voluntary cuts from OPEC. So next week, so Monday, not factory orders, more bond auctions. Tuesday, we get some ISM, some more non-manufacturing data. We get jolts. Now, in the past, the job openings is something Powell has commented on. If we see, that, increase significantly, it would say the job market's more out of balance. So that would be negative. Get mortgages. Wednesday, we get some ADP payroll data and some non-farm productivity, crude oil inventories. Thursday, we get these challenger job cuts, so we can see, how many companies are laying off more. We get jobless claims data. So again, we'll get another read on unemployment, natural gas storage. We still got some Fed officials talking. And then Friday, we get, standard payroll jobs data, and that will be important to see if unemployment is increasing. As you can see, it's not expected to increase, expected to be flat. So that could, again, Wednesday, Thursday, Friday, those economic data points could cause some volatility. Also, we get Michigan sentiment. And again, if these inflation expectations are higher than previously or higher than expected, that could be a negative as well. So I hope that all helps. Okay, we'll look at the earnings calendar just in investing.com real briefly. Earnings should be pretty much wrapping up. So if anyone knows of any significant earnings coming up, you can throw that in the chat. AutoZone, Toll Brothers, Home Builders, Asana Software, Signet Jewelers, Retailer, Box. So we've still got a smattering, but again, winding down all the Magnificent Seven, all the majors, C3 AI, so that might cause a little bit more exuberance in the AI sector. There was a little bit on Friday as well. So again, you can go through the list, the longer list in investing.com. There's AVGO, Broadcom, so semiconductors, Dollar General, retailers, DocuSign. So we've still got some important earnings. So as always, we recommend, you be aware of the upcoming earnings, what sectors they're in, how they might impact your watch list stocks in your portfolio, etc. And you can hear, how we trade around earnings when earnings matter. And right now, earnings definitely matter. You can see anyone that's beating earnings is getting rewarded right now. Also, guidance is important. What are they saying for the upcoming quarters? If they miss, they're going to be punished severely. Okay, now we'll jump over and we'll look at the market screen in Webull. Let me grab a quick drink, check the chat, and we'll again look at the market screen in Webull. Just a quick note, as you can see, Webull has changed their offer for free stocks recently. So now you can see you can get up to 70% free fractional shares by depositing, let's see, 25,000 or more. They'll give you 70 free fractional shares. If you deposit 500 up to 25, you get 20 free fractional shares. So again, you can get many fractional shares. They also show you what the value of those fractional shares will be. 3 to 3,000 each of those fractional shares. They're also still offering 5% interest rate on your uninvested cash in your cash account. So if you're not already using Webull, you can see we use Webull for our market analysis, our due diligence, the majority of our trading. And if you join Webull and deposit into your account, you can get these free stocks. If you please use our affiliate link in the description box below, you'll also help support our BeachBum trading community, which we greatly appreciate. So here's the market screen for the online browser version of Webull. And I'll also show, hopefully tomorrow probably, I'll show you another way to get this market information that I discovered. So we can see in the histogram, advancers, decliners, it was a very exuberant day. The majority of the advancers was relatively small, but again, very positive. Decliners, major decliners, extremely small. So again, very positive, very exuberant. As we've seen on Fridays recently, we get an outflow out of the NASDAQ, inflow into the NYSE. It seems to be, a trend on Fridays. So we saw the strength in the Dow, strength in the industrials. So on Fridays, be aware this seems to be an ongoing trend. Good morning, The Crow. If I missed you, MD, welcome. Thank you all for joining us. Hope you all are doing well. Again, you can also see a near-term calendar of the upcoming earnings, also dividend splits, economic data, and events in the calendar section in the market screen in Webull. And again, you can see who's reporting, pretty soon, and trade accordingly. So look at the best performing industries for the week. So again, we saw solar, so renewable energy was positive, financial sub-positive, metals and mining, again, basic materials, gold. Got several gold miners. Retail, some positivity. That's going to be a little mixed. Home building. Transports, yellow. Construction, relatively positive. Textiles, pretty flat. So logistics, positive. Biotech, pretty split, a few positives and then a few negatives. We'll talk about biotechs as well. Let's look at the ETF flow. So for the indices, you'll see a recurring theme, small caps, mid caps. So again, more of a rotation out of the Magnificent Seven, the mega cap tech stocks, into mid caps and small caps. See TNA, URTY, those are both Russell and small cap oriented. Again, positive on the Dow. Mid caps in the S&P, mid cap, small caps. So again, reoccurring theme, or rotation into mid cap, small caps. And again, we talked about that being a seasonal trend. We were watching TNA. TNA is pretty much already run, but it continues to have some pretty good momentum. So if you're a momentum trader, day trader, there's some opportunity there. So again, the VIX, they've got the yen in there, positive on the yen. So we talked about the breakdown in the dollar. Again, Russell, small caps. FTSEs. So we see short China, up Europe. So I think Easy Mike was talking about shorting China. And at some point, we'll look at the various ETFs for longing and shorting these foreign markets. We see definitely short China, long Europe. And then NASDAQ, positive. terms of industries, they're going to be pretty much almost all green from Friday. Little negative in financials and a little bit in basic materials, but again, strong copper, you can see. Commodities, we see the carbon offsets, that's kind of related to green energy. Solar, we see gold, copper. So it's interesting as well, the bonds, you can see more flow into the extended duration, the long end of the curve. And then this was interesting, a gold hedged one. And then emerging markets. So also Easy Mike is talking about some bonds, emerging market bonds. And at some point we'll look at some of those ETFs. Again, Forex, all the foreign currencies rebounded against the dollar. Let's look at the futures in FinViz. So again, we see those, exuberant runs late in the week in all the indices, except for, the NASDAQ looks pretty flat in terms of futures and a little bit of a rollover. So, again, the mega cap techs didn't really participate in the exuberant run on Friday. They have a heavy weighting in the NASDAQ. So again, the NASDAQ's much flatter than the other indices. See that big pop in the Russell. So again, we saw this rotation from the mega cap techs into the small cap, mid cap Russells. See, the Nikkei has been pretty flat, but the Euro stocks and the DAX broke out. Nice runs. I was looking at the risk reward on some of those ETFs, and although it looks like it's at a new high, if you zoom out a bit, it's still got some room to run. So the risk reward on some of those ETFs isn't as attractive right now as that I would pursue them. Again, we see that, steep decline in the VIX starting, late October, early November into December. And, it's pretty low, pretty flat. See, again, that, quick pop in oil up to about 80 on the fear that OPEC would cut. And then it quickly dropped down back below 75 when they did voluntary cuts. No guarantee that they're going to cut. Natural gas has been weak. Looks like it's kind of bottoming around that 280, 275, 280. That's a little bit surprising. I did hear some news that Europe's demand for gas wasn't expected to be that high right now. So possible catalysts there. We talked about the ETFs many times for trading oil, natural gas. Long on natural gas is BOIL. Short, cold, KOLD. You could also play UNG, UNL. See that nice exuberant run in gold. So we see that gap up over 2050. Nice pop to a new high. I'm a little concerned, we might see a retracement. That's a pretty exuberant run. Also, we've got that gap to fill. So we might get a little bit of retracement in gold, some stability. But right now it looks like it's got pretty good support above 2050. Silver, again, gapped up over 25, broke out. It's got more room to run, up to 30. So a little bit of a catch-up trade potential in silver. Again, we've talked about various ETFs, and we'll look at them again to long or short silver. Again, I wouldn't be surprised to see a little bit of a cooling off, retracement, filling of that gap. Got good support at 25. So again, that wouldn't surprise me, given the exuberant run that we've seen. Alan Krantz says China buying gold. Yep. So we see platinum, bounce back up to its highs, kind of consolidating. Palladium's kind of rolling over after its recovery run. See corn bounced up. We'll also see that in wheat. So we see wheat finally found a bottom. Usually when you see those tweezer bottoms on wheat, that's pretty positive. And it finally, popped back up and breaking out. We're still long wheat using WEAT, which is the ETF on wheat. And that's now become profitable. So again, we're long wheat using WEAT. See that severe drop off in sugar. That's kind of interesting. There is an ETF, cane, CANE, to long sugar. So there was a shortage. So that was kind of interesting. Might be an opportunity there coming up. We see the run-ups in all the bond prices. Again, we saw a decrease in the yields, run up in the prices. Again, trend's been steadily up. We get some chop. But again, the trend in all the bonds is up on prices, down on yields. See the dollar, it did break down below 103, bounce back up. It's kind of hovering around that 103 area. So again, all the foreign currencies, followed that pretty much. A little bit of weakness in the euro, so recovery in the yen. So I hope that all helps. Okay, I'll come back to ETFs. I want to make sure we have time to cover our strategies and our trade ideas for this week. So let me grab a quick drink and we'll talk about our strategies, trade ideas for our theme of making money trading in December. Okay, our theme again for this week is make money trading in December. We strive to help you identify ways that you can make money trading in December. And we'll look at the seasonal trend using this article in investing.com we typically use to see what the seasonal trend typically is. And again, you can reference this in the link in the notes. So here's the monthly chart for the historical average of the performance of the S&P on a monthly basis. So again, we always use this to identify the seasonal historical trends. And we see, October, November, December is positive. And, we've been talking about that bump, that seasonal trend. So again, November's positive, average 1.5. December's even more positive, 1.6. So again, the seasonal trend and the trend in December is very positive. So we would expect, further upside, even though we've had these exuberant runs in the indices, etc. The trend, historically has been up. So, and November was a very positive performing month. Hopefully, you've been able to ride this trend back up and make money trading through this trend. So we hope that helps. You can also hear, we've got several short videos coming out, but you can listen to those right now via the links in our notes on how the stock markets typically perform in the month of December. It's got a little bit more detail in those regards, and then also what are the best performing sectors and industries in the month of December. So again, as a bonus, you can access those videos now via the links in our notes, and then we'll be releasing those as soon as possible. We also have a previous lengthier video on how to make money trading in December, so you can again listen to that previous video. It goes into more detail about some trade ideas, strategies, etc. on how to make money trading in November. We'll be talking about the Santa Claus rally, through the end of this month, through the end of December, into early January. So you can hear about, what is the Santa Claus rally? Is it real? Via the link to that video, that previous video in the notes as well. You can also find that on our BeachBum Trading channel. We've also, we're entering the season of tax loss harvesting. If you're not familiar with how tax loss harvesting, tax loss selling works, and what that might mean, how you might be able to take advantage of that to save money on your taxes from your trading, you can listen to that lengthier video via the link in our notes. And again, we'll be talking about that. We're now within that 30-day window of when, most people will be taking their tax loss harvesting. We'll talk about this trend. Again, I expect that will put pressure on losers, the biggest losers, particularly ones where some of the money managers, etc., they'll want to harvest their losses, and that will that'll occur mostly in probably the first couple weeks of December before they all go on vacation for the holidays, and they can sell those stocks and within 30 days they can't buy them back. So that will occur. If they want to buy them back, then they'll probably buy them back in early January. We'll be talking about that as well. It's called the January effect. So again, if you want to learn more about tax loss harvesting, how it works, I'd recommend listening to that video. Again, we're not tax attorneys, tax advisors, financial advisors. So if you'd like more information about, can you take advantage of tax loss harvesting or anything related to saving money on your taxes, we would recommend Mark J. Kohler, and you can find a link to Mark J. Kohler. They are tax attorneys. We use them both for tax advice as well as just basic legal advice. And you can find that link under the business resources on our homepage. Again, our homepage is beachbumtrading.com. We also have a video on the wash sale rule. So the wash sale rule is, like I talked about with tax loss harvesting, is you can't buy back the same stock or an equivalent stock like an ETF that holds that stock within 30 days of selling it, or you essentially negate your tax loss benefits. So if you want to learn more about what the wash sale rule is and how that works, so you can avoid getting stuck and losing your tax loss benefits, you can listen to that video via the link also in our notes, or again, find that on our BeachBum Trading YouTube channel. We're also entering the winter season, so we've also got a couple videos, short videos coming out about how the stock markets perform in the winter and what are the best performing stock market sectors and industries in the winter. So as we're going, December, January, February, if we're looking for those seasonal trends going into early next year throughout the winter, again, you can access those videos now via the links in our notes, and then we'll be releasing those as soon as we can as well. Okay, so now I'll jump back to our ETFs. I see a number of people are mentioning ETF sectors, and we'll take a look at, I'll open up our ETF Google Sheet, try to catch the various tickers people are mentioning. Just a quick reminder, if you'd like 24/7 access to this ETF Google Sheet, you can get 24/7 access to our ETFs Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet. Again, as we identify opportunities like looking at the futures, looking at this market data, if we want to find an ETF that we can play that long or short, at various index, commodity, etc., we jump over to our ETF Google Sheet and identify the ETF with the risk-reward profile that we want to use, and then use that ETF. So I want to highlight a few that we've added to the research tab, and we'll take a quick look at each of those. So the first one is EMB. As I mentioned, Easy Mike had been mentioning EMB, which is an ETF on emerging market bonds. So we'll take a look at that. And thank you again, Easy Mike, for sharing EMB with us. Also, Stonks for Days pointed out this ETF on the Magnificent Seven, so that if you want to long the or short strictly the Magnificent Seven, there's this ETF MAGS. So again, thank you to Stonks for Days for adding MAGS, for sharing MAGS with us. And then another idea I had is, again, we're expecting, some rotation into energy. There was a little bit of a pop in energy. So if you see the XLE, which is the sector of energy, and you want to play that whole sector versus, specifically gold or natural gas, I found a couple ETFs, Doug, which is a short on energy, and also ERY. So we could look at the comparison of those two bear. They're both short on the energy sector, and we can see what the risk reward profile of those is relative to each other. So first I'll jump over, we'll look at EMB. See Easy Mike, was talking about EMB. Hopefully that's not too small. So if you go to the bottom of the research tab, it's where I've added the new ones. Eventually we can sort these and they'll show up under the category that applies to them. So if we look at EMB, this is the emerging markets ETF. You can see it's currently about 86. I've identified, the 52-week low is essentially the support level. So right now, it's run up already. So if we look at that in FinViz, so again, you can find the link for the various ETFs in the FinViz URL column in the research tabs. You can click directly into those. So you can see EMB has run up. So if you were already in it from that low, yes, you made a nice profit. See, it pays about a 5% dividend. It is optionable. It is shortable. See, it's what it's comprised of: dollar-denominated emerging market bonds. So it's on a pretty nice positive incline. It's got some upside, some potential upside. It looks like it pays a monthly dividend about 36 cents. So if you want to trade that momentum, you might like EMB. Again, the risk reward profile right now isn't that great for a swing trade. That's MAGS. Okay, so there's EMB. So it's really not, the factor of 2 that we would like, but again, it's relatively stable. Pays a monthly dividend, so it's also another option for a dividend payer if you're looking for a monthly dividend payer. So thank you again, Easy Mike, for adding, turning us on to EMB. Talked about this MAGS. Thank you again to Stonks for Days for pointing out MAGS. This is on Magnificent 7. So you can see the risk reward profile for MAGS right now. So it's pretty balanced, a little more risk than reward right now. So it's pretty high, close to its 52-week high. So we can look at the chart for MAGS. You can see it bounced off of this resistance line, off its high, kind of rolled over, getting some support from its moving average. So again, this is the Magnificent 7, relatively new ETF, so not a lot of history on it. Doesn't look like it pays a dividend. It is optionable and shortable. So you could, I couldn't find a specific ETF to short Magnificent Seven, unfortunately. But if you are able to short individual stocks, individual ETFs, you could choose to short this MAGS if you wanted to short the Magnificent Seven and play part of that sector rotation out of the Magnificent Seven, like in the small caps, mid caps, like we saw. You can look at the composition of this ETF. You can click on that link in our sheet to look at further facts. See, this is a proprietary weighted scheme. That's interesting. And then the holdings, you can see the pretty balanced in the Magnificent Seven. So again, if you want long the Magnificent Seven, well, if we get this rotation out of the Magnificent Seven and then back in, which I kind of expect towards the end of the year, I think money managers are going to want to have the Magnificent Seven on their books at the end of the year. I think we might get a push down. They might try to make those cheaper. So we might see a sell-off in the mega cap tech, the Magnificent Seven, and then a recovery towards the end of the year. So we're looking for opportunities to play that thesis, that theory. Also, again, I added this DUG and ERY as ways to short energy. You can see right now DUG is showing a positive risk-reward profile. So if we want to short energy, that might not be a bad option right now. So yeah, it's a pretty positive risk reward from a very short-term time frame. So again, if you're a short-term trader, day trader, a scalper, you might want to look at DUG as a way to short energy, especially if we get a recovery, quick pop in oil, and then bounce back down. ERY is not quite as attractive, but you can again compare the risk reward profiles of those and also look at the composition of each of those to see which one is more attractive to you. So now I want to bring up our technology components screener, and let's look at the various components, technology components, see if there's opportunities there. So again, you can find this screener as well as other screeners to identify, potential stocks, various ETFs on the screeners tab in our ETF Google sheet. So here's the various components we've got in our screener. Again, we added ARK-K recently. We were talking just the other day about potential opportunities. If ARK-K maxes out, approaches its near high, we might look at shorting ARK-K with SARK, SARK, which is the short on ARKK. You can see ARKK hasn't quite reached its peak yet. Again, I think there might be an opportunity to short ARK-K towards the end of the year, so we'll be watching that, see when it maxes out. We'll be looking to short that with SARK. You see FANG-U kind of rolled over, so the FANG stocks kind of didn't even reach their high, and looks like they're rolling over. Same thing with SOXL, so semiconductors, and the NASDAQ in general, TQQQ. So we're seeing kind of a rollover in each of those technology components. TECL is a broad leveraged ETF on the technology sector, and we've been talking about an opportunity there. We made some money this week shorting that technology sector with TECS. So the short component for TECL is TECS, and again, we made some money already. Then we had that little bit of an exuberant bounce. We got stopped out of our TECS position. We'll be looking to re-enter again if we get another rollover. So TECL made a new high, so we'll be looking for it to peak out, and then again shorting the broad technology sector with TECS. LabU, so that we saw the biotech sector ran up, broke out, ran up. Looks like it's got some, exuberance momentum. I expect that to stall and roll over. So Lab D is the short component of biotech. So again, I think that exuberance will stall out. Right now, it's got momentum, it's got exuberance. There were some buyouts. There'll probably be further buyouts towards the end of the year. So it's got some momentum. Lab U's got some momentum. So if you're looking for a momentum trade, Lab U. If you're looking to short that when it maxes out and rolls over, it's Lab D. Crow says TCS holding 11. Okay, so now we can look at other ETFs. Okay, we talked about Lab U and Lab D, so you could see those relative risk-reward profiles right now. See, Lab U still got some room. Tomorrow we'll talk about MJ. We've been watching MJ. That's on cannabis sector. We talked about China right now. We frequently talk about the ETFs, long yen, short yang. We saw right now the trend is down. So we see yang went up on Friday. So again, you can trade these almost every day. We saw coal run up. Saw corn, again, it's getting close to its 52-week low. Not that great of a risk-reward profile. We'll watch for a peak in the Dow and could short the Dow with SDOW. Again, we see it's close to a 52-week high. Got a number to long energy, so these would be the corresponding. We got the corresponding shorts, DUG, ERY. If you want long energy, we've got several. Gold, and again, we're going to look at this. We talked about gold made a new high. Tomorrow we're going to take a more detailed look at GDXD. We're looking at this as a possible way to short gold at that all-time high. Again, number of choices, so you can pick the one that has the composition, the risk-reward profile, but you can see short-term what the risk-reward profile is for GDXD. The corresponding long is GDXU. So again, if you want to short-term day trade gold, GDXU long, GDXD short, or we've got DUS, DZZ, GLL. Again, all of these seem to be lagging the gold price. So as you can see, even though gold made a new all-time high, tomorrow we'll look at GDXU. It really is lagging and has not made a new 52-week high or all-time high. Talked about natural gas, long boil, or UNG, UNL, short cold. Talked about oil, long gush, or UCO, short drip, or SCO. USOI is a dividend payer on oil. Again, if oil drops below 70 or so, we would be looking at picking up USOI as a monthly dividend payer. We still have GLDI on gold and SLVO on silver, but I am trailing GLDI with a manual stop. If it does roll over, we'll stop out of GLDI, take our profits. And again, just in case we get a significant downtrend for a while in gold, we want to protect our profits in that one. SLVO hasn't quite reached that point yet. but I'll do something similar with that. Talked about retail short, probably be looking at this into early next year. So, positive on retail. These clicks and online are, reaching pretty close to their 52-week highs. Talked about the exuberant run in the Russell. So we see URTY. If you want to short SRTY. Talked about semiconductors. Again, shorts SOXS. And we talked about silver. Again, long silver AGQ, or we like SLBO. Miners SILJ. Short silver ZSL. So again, we've got some good volatility. Again, I wouldn't be surprised to get a slight retracement, and then further upside into gold and silver, more of a catch-up trade in silver. We saw that drop off in sugar, but it's still relatively high. But you can use this cane to long sugar. Talked about TECS and TECL. So you see TECL had made a new high, retreated a little bit. As the Crow pointed out, TECS sitting above 11. It had dipped a little below 11. So again, we'll be looking for TECL to peak, and then we'll long TECS to short the technology sector. And we've discussed this. We have a video. We'll talk about this again tomorrow. Talked about bonds. So there's the TLT. You can long bonds with TMF, short bonds with TBT. There's also several with different time frames on bonds, so you can pick those. We can see the general trend is long. Talked about uranium. Uranium's been strong, so URNM is a uranium ETF, and also URNJ on uranium miners. You can see it's lagged a little bit. Again, VIX is very low, so if you want some, insurance, UVXY. And then we talked about wheat. We're currently long wheat with WAT. And also we've watched the yen. It's bounced back, so we watch this UCL for longing, UCS for shorting. So if anybody in the chat has any other ETFs you want to take a quick look at, please throw those up in the chat. Also, we have a whole series of videos on a variety of categories of ETFs, so you can find our discussions on those various categories, comparisons, etc., in our ETFs playlist. And if you would like us to do research on any other ETFs, consider adding them to our ETF Google Sheet. You can, again, put those in the comments to this video. You can also always contact us in our Discord. Again, our Discord's free to join. You can just tag us. Again, we can. So ours is BeachBum Trading, no numbers, no pounds. So it looks like I've got one imposter to deal with after this. Also, you can find links to all of our social media sites on our homepage, beachbumtrading.com, bum without the U. So again, plenty of ways. You can let us know if you'd like us to take a look at a stock, an ETF, etc., for consideration for adding to our ETF Google Sheet or our dividend payers, etc. Gush, Becca asked about Gush. Yeah, Gush is the long on oil. Short, as Easy Mike points out, we typically trade oil with Gush long, drip short. And again, if you want a dividend payer on oil, USOI, we like to long USOI to long oil and collect a monthly dividend. So it pays a very attractive monthly dividend. And we can again look at that in tomorrow as well. If you want to look at coin, maybe we can look at that tomorrow, Alan Krantz. And You see Mike's talking about the Mexico market. Yeah, we have a number. Again, we did a previous video on Mexico ETFs, and you can find those on the research tab in our ETF Google sheet. So if you don't find a category or an ETF on the main sheet, it probably means it doesn't fit our risk reward profile. But you can do a find on the research tab. So you can see we've got EWW is a Mexico ETF, and yeah, it's been positive trends on Mexico. We may look for others for some other countries. You can see we've got Philippines, we've talked about Australia, etc., and we've done some specific videos on a number of emerging market areas. So, okay, we've gone a little bit longer today. And again, if you have any further questions, please put them in the comments, in our Discord, contact us via social media. We follow up with some of these tomorrow. So we hope you will come back tomorrow. We hope you like this video. We hope you like this content. We'd appreciate it if you'd smash the like button, help the YouTube algorithm, share our content with further traders around the world. We want to keep building our trading community. We hope you'll also share our content with your fellow traders and friends and encourage them to subscribe to our BeachBum Trading channel. Join us in our Discord. Join us in our community. Again, our goal is to build the community, share trade ideas, help you make money trading, both in December and throughout the rest of the year. So if there are other ways that we can do that, if you have suggestions for improvement, etc., please let us know. And again, we hope you all come back for part 2 of our weekly trading game plan for the week of December 4th through December 8th. Same time tomorrow, 10 a.m. Eastern time. And we'll be using all of this data, trade ideas, etc., to select our top swing trading stocks to watch, stocks in our bullpen and our shopping list, talk about additional trade ideas and strategies to hopefully help you make money trading in December and throughout the rest of the year. So thank you for watching. Thank you for everyone that joined us in the chat. And hopefully we'll see you all tomorrow, and have a great day.